This Tuesday, before the market opens, SoFi is due to report their earnings, and as we have seen last week with earnings season taking place, the majority of the market is starting to fall. So should we be considering buying this company before their earnings? Well, we have Forbes. They believe the answer is yes. They see this company hitting $15 very soon, meaning a plus 40% just over the next week. Now, in terms of the performance of this company, it is up 55% over the last 12 months. However, when we look at it from over the last 5 years, this was a company that was trading pretty much in January, February 2021 at $26. So can it reclaim this, which would be more than double from the current price? We're going to find out in today's episode. We're going to do our deep dive analysis, get to our own valuation. What we can see though is only Seeking Alpha believe this is a buy right now. Both Wall Street and Quant have given this a hold. It is trading, in fact, towards the upper end of the 52-week range. It has increased nearly double from what we saw in 2024 when it was around the $6 mark. And we do note something we will cover shortly. This company has a forward P of 101, but with earnings expected to increase, this is expected to fall very drastically. So let's talk about their quarterly earnings from July and see what the expectation is for this quarter coming up, because it does look very good for SoFi. In fact, in terms of the number of additions they've had to their members, what we are noticing a 41% increase year on year just in the latest quarter, and that is what we have seen, if not better, in the previous years. The one question that investors have to ask is, do they believe A, this can continue, and are they worried about the slowdown that we have seen, as over the last few quarters this number is coming down. However, having said that, they did add around 643,000 members just in the latest quarter, and this is something that Wall Street will be eagerly looking at when their earnings are reported. Now, they've also increased additions just throughout this company. What we are noticing is a lot of growth, but again, the question we are looking at is this slowdown expected to continue, and at what point will it start to level off? Good news though, they have been increasing still at a very impressive rate, not just their new product additions, but we also see their Galileo accounts up 23% in terms of year-on-year growth. Now, when we take a look at how they performed in that previous quarter, 597 million in terms of revenue, 22% increase in terms of year on year, but again we can see it has started to slow down. Nonetheless, very impressive, and we do see the same in terms of the adjusted EBITDA, 23%, although we do have to point out it has started to slow down from the highs of Q4 2023. So again, lots that we do need to keep our eyes on for SoFi. Now, very, very impressive results in terms of what they reported in the previous quarter. As we can see, their net revenue was higher than the upper bounds of their guidance for the quarter. The same to be said for their EBITDA, above the 125 they were estimating at the top end, and we can also see that also reflected in the EBIT margin as well as the net income. So very, very strong, and if they do that again, we could see the share price in fact rocket very high towards the $15 mark that Forbes believe it will hit. In terms of the estimations, even for the next quarter, we are still seeing growth, 18 to 22% anticipated for year-on-year growth, but again, they could possibly, similar to Q2, smash right through that. Margins also looking good, pretty much anticipating 26%, and their net income $40 to $45, with the earnings per share pretty much anticipated for. Remember, if it does follow suit to the previous quarter, we are expecting this share price to increase quite significantly. Now, in terms of what they're anticipating for the full year, again, not just their quarter that they did very strongly, but also in terms of the 2024 guidance, they've increased it. They expect 17 to 19% in comparison to their prior guidance of 15 to 17. So nice to see they have increased it. But again, remember what we said, is this going to slow down significantly? Given 2023, it was 35%. They've kept their EBIT margin the same at 25% in comparison to the prior guidance. And nice to note though, that is above the margin of 21 for the full year 2023. And very strongly to see their 2024 guidance as a net income. As we will come to show you, they have had many years of a net loss and also increased from the prior year guidance, and the same to be said for the earnings per share. So overall, we do like this in terms of where they have been historically performance-wise, membership additions, as well as increasing their forward guidance. Now let's take a look at what they're expecting moving forwards, and as we can see, growth is the name of the game for SoFi. Massive, in fact, expected over the next few quarters. And if we just look back to the previous 3, they have a 75% track record. 3 of the previous 4 quarters they have beaten, in fact the more recent 3. And over the next full year, December 2025 at 0.25 EPS estimate, that will lower that very high forward P down to 43. Whether or not you believe they can hit that, or maybe in fact surpass that, that again is something just to consider. And when we look at their actual financial metrics, what we've noted, their free cash flow per share has been negative for the majority of the last 10 years. Remember, we want to see consistent increases over the longer term. What is good to report though, over the next 12 months, they are expecting this to be positive, around 54 cents per share. Then we get to the sales growth. Now remember, question is, will it start to slow down, or can they at least keep up of a baseline around the 20 to 25%? We notice 30% on a trailing 12-month basis, which is lower than the peak of 2021 at 73%. Nonetheless, very, very impressive. And we can see in terms of the total sales in a numerical format, pretty much quadrupled from 2017's 500 million to 2023's 2.1 billion. Now, you also want to point out they have diluted your position as a shareholder over the longer term, just something to bear in mind. Now, when we take a look at the ROE, we can see it is negative. Again, we'll come to show you their income statement, but they haven't made a profit in quite some time. But the good news is for 2024, they are expecting things to change, which is always good to consider investing in companies that are a turnaround play, moving in fact from negative to positive, and you should be rewarded by the market if these are high quality companies. Now, in terms of their net debt to EBITDA, we can see this in fact sitting at 1.53 over the last 12 months. 1.15 expected to come down, so their balance sheet does look strong. Remember, net debt to EBITDA, these are the number of years it would take the company to pay off all of their debt net of cash on hand. Correlates to the balance sheet as we just mentioned, and EBITDA referring to the earnings before interest, tax, depreciation, amortization. We also want to let you know every Monday we release a free weekly article to your inbox where we uncover undervalued stocks that we believe deserve your attention, as well as updates to the market over the last few days. So do click on the pinned comment below, sign up, and you can read straight away. You will also be able to gain access to 36 undervalued stocks for the month of October. We release one every single month. Lots of information, upside that Wall Street themselves see, as well as flagging those that sit within our own portfolio for those that are interested. And for this month, we have 22 undervalued stocks that Wall Street themselves believe have the most upside out of the whole S&P. So again, click on the pinned comment below, sign up, and you can read straight away. This then takes us on to inside ownership that we see at 2.6%. We see around 139 million worth of sales over the last year, and we see some buys but very small in comparison at 1.14 million. In terms of the more recent quarter, so Q4, we see 96,000 worth of sales, Q3 808, and Q2 pretty much the largest at 135 million. Now, whether or not you believe this information is useful, typically with insider selling, we would say it isn't a bearish signal because management sell for many reasons, personal or financial. On top of that, you could say it is a little bit outdated or in fact a little bit trivial, given the more recent sell is in fact just for around $96,000. Again, up to full transparency here, what we try to flag, if there is any, are insider buying. What we would say though, this buy is in fact fairly old. Remember, insider buying is bullish because management buy, they believe the share price will go up over time. Now, institutional ownership sitting around 38%. We see 73 million worth of sales over the last year. We see a lot more buys by institutions over the same time frame, in fact more than 10 times, and we see this on a very consistent basis. In fact, over the last 4 quarters, or you could go all the way to Q2 2022 before we see institutions selling more. So institutions, not just over the last year, but in the more recent quarter, have been buying a lot of shares of SoFi. As always though, do your own due diligence, never copy what institutions or insiders do. As we mentioned, we want to show you their top line revenue has been growing at a very favorable rate. As we can see, we mentioned 4 times over the last few years, 500 million to 2.1 billion. But our emphasis here is to flag their bottom line net income. They are expecting profit in 2024, but as we can see, it has been negative for the last few years. In fact, 50 million profit in 2017 has been the only time we can see. Otherwise, it is in brackets, which ultimately means a net loss. Again, just some considerations and understandings of companies that you are investing in. Now, a quick health check, cash versus total debt. We can see it has been increasing sharply in line with their top line revenue over the period, going from 325 million in 2018 to 2.3 billion in the latest quarter. As always, one number won't tell you anything in the balance sheet, which is why we compare it to their total debt, and we actually see it decreasing, which is a good sign. Cash going up, debt going down, 6.6 billion in 2018, and it's actually half that in the latest quarter at 3.2 billion. Always a good sign, things that we really like from companies that we do consider in the portfolio. Then we move on to the gradings. First one is valuation, where they get a C+. Now, as we mentioned, a forward basis on the PE, they are trading much higher than the overall market. In fact, if you are buying this company right now or when the market opens, you are paying a 640% premium. Now, you could argue, as we are about to show you, their growth does deserve the premium. Question is, how much of a premium does SoFi in fact deserve? And that is what we are going to get to in our valuation. As we said, growth looking very good. It has an A year on year, 30.3%, much better than the overall sector at 4.3%. Revenue, 23% forward looking, again better than the overall sector at 5.5%. And we see EBITDA growth, 85% versus 9.29%. They get an A+. So it looks good in that department. Then we move on to the profitability, where they get an F. Gross margin, phenomenal, 82%, much better than the overall sector at 60%. Their net income is negative 5%, not great, understandable why we have the F. Companies in the same sector around 22%, definitely something they need to improve on. And when we look at the cash from operations, effectively burning through a lot, negative 2.7 billion versus the sector's 160 million. So there are issues with this company, things that we need to consider, both bearish as well as bullish. Always good to see both sides of the company and thesis. And for a quick summary, we get a buy rating from Seeking Alpha, a double hold from Wall Street and Quant, C+ on valuation, A on growth, with an F on profitability. Now, before we jump into the valuation, let's compare this company against others in the consumer finance. We have Ali Financial, Credit Acceptance, as well as some other big names. Now, over the last year, we see that SoFi is up 55%, which is very impressive. We do see some others that are around that level. In fact, QFin is one of the best, up 150%. And when we look over the last 5 years, we do see it up only around 5%. In comparison to the others, it is the worst performing, but remember the share price just a few years ago was trading more than double. Whether or not they will perform better or in fact worse, remember that the past performance doesn't determine their future, but just something, as we said, within our own investment thesis. Now, we already know the answer, but we want to show you against the S&P. It has actually outperformed over the last 12 months. So if you are a recent buyer to this company, then very well done, up 55% versus the S&P's 39%. And when we look over the last 3 years and the last 5 years, we can see the S&P has in fact outperformed. Question is, do you believe this can outperform moving forwards? Ultimately, you need that conviction. Otherwise, there's no point investing in individual companies. You may as well just hold an ETF that could possibly track the S&P. Now let's jump into our valuation model. As always, if you do enjoy the content, value is being provided. Smash that like button, hit that subscribe and bell button so you are continually notified of these videos as they drop. Now we'll come to this shortly, but effectively our intrinsic value today, $13.50, derived from the DCF model. Now we have the free cash flow over the last few years. We're not going to talk too much about the average growth. It is skewed pretty much negative, but as we discussed, we do expect to be positive in 2024. Now we've gone for a growth rate of 8%. As you can see, we have a low, medium and high. With the discount rate, we get the present value of future free cash flows and terminal value. Add together with the cash, subtract total debt, get to the equity value, divide by the shares outstanding, and as we can see here, $13.50, indicating 22% upside. Now remember, these numbers are subjective and you can grab a copy of this model by clicking on the pinned comment below, running through your own numbers, whether it's for SoFi or any others. Now for full transparency, we will show you at the 6% rate if you believe 8 is too high, $11.80 indicating around 7% upside. At the 10% point, for those that are a lot more bullish, we can see $15.36, pretty much where Forbes do see this company in the very short term, indicating, as we mentioned at the beginning of the episode, 40% upside. Now we will take the medium rate of 8% through, and what we always like to do on this channel is a margin of safety. We start off with 10%, execute on that if it meets our 3 golden criteria: wide moat, strong financial metrics, and good forward-looking data. Now if you believe that in today's episode for SoFi, we'll buy at around $12, then we keep going till it's near the current trading price, and you could argue it isn't far off a 20% margin of safety. We also note Wall Street themselves see around 14% upside over the next 12 months, $12.50 price target, but as we saw, Forbes, their analysts, do believe this company is going to give you at least 40% upside in the nearer term. And for those that just want to see and want a larger MOS, we're at 25% a buy at $10, at 30% a buy at $9.43, and at 35% around $8.76. So in today's episode for this company, SoFi Technologies, you're getting around a 20% MOS with 14% upside. Let us know your thoughts in the comments below. Is this one you are looking to buy or maybe have recently bought? The other thing we want to do is just compare this company to PayPal. Now, PayPal currently trades at around $82. As we said, SoFi around $11. And for SoFi to have the same market cap that we see for PayPal, the price would be around $67. Now, whether or not that will hit that, maybe it will, maybe it won't, maybe it'll just take quite some time. That is something just for your own consideration. As always, give us your thoughts below. If you enjoyed today's episode, value was provided, smash that like button, hit that subscribe and bell button so you are continually notified of these videos as they drop. Don't forget to click on the pinned comment below to sign up to the free weekly newsletter. We are dropping a new edition tomorrow morning, and come and join us in the Patreon where we do talk about our weekly buys and sells. As always, have a great day, and we'll see you all on the next one.